And welcome to another episode of Daily Market Mastery with me, Christian Rauchenwald, on this Friday afternoon. It's quite a sunny and nice day. I hope you all had a pleasant week and a pleasant start into the new year. As always, before we jump into my portfolio and the markets, let's take the usual disclaimer, or let's get the usual disclaimer out of the way first. Everything that I share in this live stream / video is my personal opinion and in no way financial or professional advice of any kind. You should always do your own research, consult certified professionals, draw your own conclusions, and make your own decisions. Besides that, all the tools that I'm using, so the broker, the charting software, the strategy I'm following, are all linked in the video description down below. And as I've mentioned the last couple of days, if you haven't done so, as your New Year's resolution, you should go and check out the Elliott Wave Principle. You can read this wonderful book online for free when you're using the link that's down in the description below. And you can use the same link to get yourself a physical copy as well. With that said, let's jump into my portfolio. And we'll see we have another slightly break-even start into the day with a green touch to it. As so often, or as for the last couple of weeks, ever since I sold our $30 strike price, January 17 covered calls in GameStop, our biggest position is still GameStop, and the most important movement, therefore, is also in GameStop, where we can see that basically we have been correcting a little bit. The big question will now be, is this here in some form A, B, and C, and the correction here is over and we go up now? Or is this the beginning of a bigger correction? Or is this the beginning of wave C, of a flat correction that takes us further down? It's gonna be interesting. If we make it below 30, that would be nice. I mean, there's still basically 2 weeks left until my call options would expire. And ideally, if I want to keep the shares, ideally these should expire below 30. Otherwise, I still would have to consider if I want to roll those calls out to a future expiration date, which still would be profitable, but it means that from the $2,800 that I received in premium, I would have to give some back, as you can see, because right now I could only realize $1,240 of that option premium. To visualize that would mean I would have to theoretically buy back the calls that I sold, and then for example, January 24th, I could then sell calls that ideally are more expensive. So they would need to be higher than what we see here. So for example, the $31 calls, if I sell those, I could technically I could technically roll them out a week and up $1 for $34 credit times 6. So around almost $200 in that case, 180 or so. That would be an option. Or I could roll them further in time, or like for example, let's say till February 7th or February 14th. So we have a little bit more time to benefit of theta decay, and I could then go and say, for example, we roll them for let's say $35 calls, and we can see that then the credit would be higher. It would be $70 credit times 6, so $420 in premium, which would be around 2-point-something% for 42 days, counting from today, of course. So obviously we still have time left. So that's going to be the choice that I have to face in the next couple of weeks. Ideally, as said, if we stay below 30, or if we go below 30, then we will be able to realize a profit here. Ideally, if I want to keep the shares, we'll finish or are below 30 on January 17th as well. Then I could theoretically pocket the entire premium for those $30 calls and then just sell new calls either still on Friday, which would require again rolling, so buying back and selling new ones, or the Monday after that, which would be then January 19th. January 20th, so we'll have to wait and see if this is just some free wave corrective pattern followed by more upside, or if this indeed marks either the end of a 5-wave move and we get a correction, or this is still part of wave 4. While from the pattern, I consider the option that this is a flat correction possible. If we look at the visual aspect of the whole thing, it is also, maybe likely is the wrong word, but it's also reasonable to assume that we might have 1, 2, 3, 4, 5. If we would have that here, then we would have 1, 2, and then it becomes tricky because then that would be 3, 4. It would need to be an ending diagonal actually if we go here because we had the high here. So like, yeah, this still is a mess to label, to be honest. Yeah, so yeah, either way, ideally we would obviously sell new calls after a green candle, so because then the premiums increase for the call options. But yeah, we'll just have to wait and see, to be honest. Yeah, there is not much more to do. I will try in the future to time the writing and buying of options a little bit better. So basically, that's why we added the Bollinger Bands to our chart, just to add a little bit, a few more lines, because obviously more lines on the chart means more accurate analysis. Yeah. No, but no kidding here. So we added the Bollinger Bands so that we basically get a feeling of, if we're at the top of a Bollinger Band, we might get higher premium because it means we are, yeah, like breaking out from the regular trotting quotes. If we're at the bottom, we would get more premium for cash secured puts, or it would maybe be potentially the time to close out the covered calls, which would, however, require that I don't always use the premium to instantly buy more shares, but to actually keep the premium, because obviously when we close the calls early, we still have to pay something for them, which requires available cash balance. Either way, I'll work, especially once we have the situation with our current calls resolved. So in 2 weeks from now, I will pay a little bit more attention to when we do something. If we were in a pattern where this is basically 3, 4, and we're currently in wave 5, I believe that we might still get another push upwards. Then the question is, how long will it take, and will we then manage to get the decline that I would need to hold on to the shares in time, or will I make the decision to just roll the calls? So time will tell. Moving on, Barnes & Noble Education Inc. So again, we still expect more upside here. I'm not happy about this movement here, about this development. I'm fine with this decline, but yeah, like we'll have to see some more upside here in the next couple of days to have a little bit of extra confirmation that we're indeed right with the assumption that we go further up here. But since our exposure is not that big, we'll just hold. If we break 831, that would be the point where we would have to reevaluate and maybe even get out of the position with a small loss. Immersion unchanged. We're also waiting for more upside here, so that was a good beginning. If we break below the low at 817, we would have to reconsider our approach. At some point, we will have to relabel or like look at the bigger scale labeling again, but again, I still believe there's more upside to come, so that's fine. Costs unchanged since September, or even longer, yeah, pretty much September, or yeah, beginning of September. We actually are waiting for a breakout here on the top or here on the bottom, and it's just basically moving in between there. Yeah, might be other options in costs. No options available. So I just want to say it might be interesting to sell cash secured puts at 650 or 6 for that. Yeah. So since we seem to relatively stable, stay above that. But yeah, NEO, we believe more upside to come. So, but while this year's went well, not happy with this development. So we'll see in the next couple of, yeah, in the next 2 weeks also, if we're right here and we'll start to go up here, or if we're wrong and we go down here. Yeah. There in NEO, we also sold the covered call or not. NEO, we sold the April 17th $7 covered call, just to pocket a little bit of premium. We could have sold the lower covered call, but we see that if we are right with our labeling, we expect NEO to reach at least 676. So, and the April 17th, do we get April? Yeah, so that would be April 17th. So basically till here, it would be possible that we get to see that development. And if we then go above 6 for the second profit target and have the shares called away, we still would pocket a decent profit. If we keep moving sideways, or maybe even keep moving down a little bit, we at least earned, I think, $25, $27.90 in premium. So a little bit extra money, so not too bad. Novavax, I said, my calls are pretty much dead, but I expect way more upside. This could likely be wave 1, A, B, C for wave 2, and we're now about to see wave 3. However, we will only add to this position, first of all, if we have freed up capital, and second of all, if or when we break the 1074 as first indication that indeed this is a big A, B, C 3-wave corrective pattern, or X, Y, Z is the correct labeling as a combination. Yeah. Moving on, Algorand should have, yeah, looks like we finished the correction at 38.2% retracement. We didn't get the breakout from the acceleration channel using candidate channeling technique. So it's possible that this is maybe even only 1, 2, 3, 4, 5, A, B, C, and we get another 5 waves down to maybe even the 61.8 retracement. For now, we're gonna hold our Algorand, the little bit that I have. Simply because even if we get another push down, then there should be another wave. It might mean that it takes half a year or something until we see that last wave, but selling now doesn't seem like a reasonable option. Bitcoin has been a little bit confusing with this mess here. We'll just have to wait and see. We didn't reach the minimum target that we would expect down here. Visually, it looks like we have a 5-wave move here, but then we make a new low, which makes no sense whatsoever. And unless it would be a corrective pattern, if that is A, B, C, then it makes sense. Yeah, so A, 5 waves, that should be 3 waves, and that should be 5 waves, then that's a corrective pattern, which, however, then would indicate that this is wave A, this is wave B, and then wave C, however, doesn't reach our usual minimum target. Could be finished here, especially with the upward movement here. Doesn't help us with the mess that we have here then. So if that is basically A, B, and C, what the heck is this then? So especially, yeah, like, do we then have in some form, is this then a fluke that we can ignore? And this is 1, 2, 3, 4, 5, which would be possible. Yeah, I'm honestly not 100% sure. We'll have to wait and see. Yeah, we're going to hold our Bitcoin position anyway longer, the little bit that we have there. H&T should go further up, so we'll just keep holding. Could be that this is some weird corrective pattern, so there might be some temporary downside, but I still believe that there's more upside here to come. Storage, we want to get out at 80 cents. Although, depending on how this develops, we actually have 1, 2, 3, 4, 5, A, B, C. So there should be more upside, which means we might eventually adjust our profit target. But right now, we still keep it at 80 cents. XRP should move sideways and down, ideally. So to break out from the channel, it would be theoretically possible. Where's the 21.4 retracement? 21.4. Yeah, it would be possible that this is the entire correction and that we're now getting wave 5, then so be it, yeah. But other than that, there should be actually more correction first to come. Maybe down to 146, 150 before we go further up. We'll see. And XYO either finished the correction here and we're now developing wave 5, or which is the most likely scenario here in my opinion, or there's another wave down coming. But yeah, I'm not fully happy with the pattern that we have here on the chart, but visually it looks like there's 1, 2, 3, 4, or 4 not finished, 4 till here. And yeah, so technically if we use candidate channeling technique, then this would be our breakout that indicates the end of wave 4, but doesn't look like that's the case here. So we'll have to keep an eye on it and then just relabel as we go. I don't like that this corrective wave already comparably drags out very long. We might need to label on different time frames to label the overlaying patterns, but yeah, I'm not going to do that today. Yeah? Another thing, I was considering if maybe we switch to, so I mean, GameStop has been good to us, and I believe there's way more upside in GameStop yet to come. As said, I also believe that there's still at least one correction first to come before we continue further up, but it's possible that we get another push and then we get our correction. Yeah, like, I eventually have 14 days left to make up my mind how I want to handle the trade. Obviously, the closer we get to expiration, especially if we stay above 30, the less profitable, or the less profit of my existing calls or covered calls will I be able to realize. So I cannot wait till the last day unless we make it below 30. Then I can wait in peace for the last day. But yeah, like question would be, do we want to keep focusing on GameStop? Do we want to maybe, for example, if let's yeah, like, I mean, yeah, we don't know what will happen, but if we assume that GameStop on the 17th of February would be below 30, then we would still have our 600 shares, and which would mean then we could, for example, switch back to writing weekly calls. And if we on Friday would sell, yeah, like depending on where we are, if we sell something that's like $1 or $2 far away, we can see that we get, right now we would get around $100 in premium, not even, yeah. So like a little bit like let's say $600 per week, which is definitely not little money. Yeah. So considering the portfolio size is around 19,000 now, so let's round up to 20. So 1% is $200. So we would get 3% in a week in premium. If we get those shares called away, then we anyway made profit. So kind of like, I mean, I would still cry if we miss out profit, of course. Yeah. Yeah. On the other hand, if we switch to selling cash, so then the question is, if we get $600, what do we do with them? Do we, as planned, increase our exposure in NEO and in immersion and in COS? I think NEO and immersion were the first two to make it to 100 shares, so that we can actually start to sell covered calls there as well to earn a little bit more extra premium. Or do we I don't know, like, yeah, like look for something else? I think the way to go is to keep, I'm going to switch here. So since it's going to be a little bit of, not monologue, but yeah, don't forget, like, subscribe, email notifications. So I think my trading over the years has developed in some way. Initially I blew up a bunch of Forex accounts, binary options accounts, regular investing accounts, and so on, because I didn't have a strategy. And I was pretty much just flipping a coin, if that, yeah. Whereas ever since I discovered the Elliott Wave principle, I'm not going to share the full story, but ever since I discovered the Elliott Wave principle, my returns have actually been quite good, yeah. So doesn't matter if it was 2020 where I started trading on eToro after the COVID crash, which obviously then was a quick recovery, so kind of like easy to make money, where I finished 6-7 months with, I think, 25 or 28% return or so, 21, 22, and so on, all profitable. 22, despite the decline, profitable, and with more, so 21, 22, both more than 30% return. And the only potentially losing period was then from 23 to 24, when I had a time where I just, for whatever reasons, doesn't matter, but where I started trading with 20 times leverage, yeah. So which obviously is like huge risk, huge reward, which meant huge 5-digit swings, and that eventually also started to have a toll on my nerves. Yeah, maybe not nerves, but on me personally. And eventually then also because I was annoyed by the high fees and the lack of certain instruments on eToro, decided to switch to Interactive Broker. But overall, ever since I discovered Elliott Wave principle, while I've been wrong plenty of times, nobody's right all the time, but it helped me often enough to identify turnaround points, tops, when to enter, and so on. So it really has been a great tool in my arsenal, and my performance has been quite well. And now, obviously, since we switched to Interactive Broker, I started to also jump into option trading. So, but not in the form of buying options, although we also did that to some extent, with, let's say, mixed results. We had a few SPY options, but small ones and short expiration, that we walked away with profit. We had a few cases where I predicted the right movement, like with Intel, but the put options that I bought had a too early expiration. So I lost money on that trade instead of making profit if I would have just shorted, for example. We had examples with Novavax where also I called the right turnaround point, but not the end of the correction, just the intermediate end of the correction, and where then a profitable or a trade that was in profit turned into a loss, and so on. So, but I think the core point is that I learned a lot and I discovered that by selling cash secured puts instead of using limit orders, yes, we might here and there miss out on entering a trade, but we actually earn premium while we wait for the price to reach our desired level. And by selling covered calls while we're holding shares, even if the price of the underlying, so if we switch back for a second, so even if the price of GameStop, for example, we got our shares assigned at 30 and our cash secured put, so I don't know when exactly, to be honest. It's been a couple of months, yeah, maybe July. So we got our shares assigned below 30 or probably here, I don't know. And then even when GameStop was lower, we still made at least like $50, $70 per week, which is not a lot considering that the portfolio size initially also was 10,800 euro. but it was still a little bit extra return that we made every week from writing those covered calls instead of just having the profit from the shares. And we even, well, initially we got like, I don't know, initially we got 300 shares or 400 maybe, but with all the premium that we earned, we even made it to a total of pretty much everything in this portfolio right now is paid for with premiums from GameStop options. So plus another 100 shares that are already transferred away. So I'm seeing some posts and some experiences from other traders. So switching back here, I just am not 100% certain if I can't make more, you know, like, I mean, my returns have been great for the last half year since I switched to Interactive Broker, which obviously was a bull market. Everybody can make money in a bull market. Yeah. So my returns have been great, with a little bit more than 100% in the Interactive Broker portfolio since the middle of May. And I'm not saying that this is sustainable, yeah, because it depends a lot on obviously option premiums in that case, and which depends on the implied volatility and other factors and whatnot, yeah. So, but I feel like I could make more, you know, like by timing the option sale or purchase better. So basically selling covered calls after an upward move and selling cash secured puts after a downward move at an area that I expect the price will anyway turn around. So we get higher premiums, but have lower risk and whatnot. Yeah. So, but all of that, unfortunately, like on one hand, it's just theory. On the other hand, it will only be, I will only be able to dive into that or potentially test that once, or if our GameStop shares get called away, or once at least our current options expire worthless, we can write new covered calls, and we can then actually use the premium that we get from those covered calls to do some new plays. But even, I don't know, NEO might be one of the cheaper ones. Yeah. So if we say NEO, it might actually be, sadly, the premium there is relatively low, because if we would say we would be willing to enter NEO at 450, we see that we need $450 capital, because we would need to buy 100 shares at 450 if we sell a cash secured put and the price falls below 450. But we only would get $14, or actually, yeah, $14 or $13.50 in premium. So, which would be, I don't know, 2 or 3% on our investment, which still kind of is like a decent return. Yeah. So it's just the absolute amount. It's like if I were to go on Wall Street Bets and say, okay, I sell a share, I sold a cash secured put and I made $14. Doesn't matter if it's 3% for a week or so. It's still not an impressive amount or so. It's kind of like similar with selling the covered call in NEO, where we got $28 for a period of almost 4 months, or actually, yeah, like 3.5 months, which is not a lot, but at the end of the day, it still adds to our portfolio. So yeah, like maybe we go down that route then. So maybe if we don't have the shares called away, we use the premium we get from GameStop to basically, if we get 600 in premium, we can sell one covered call, one cash secured put in NEO, since we are relatively certain we have the turnaround point identified. Or we could buy another 100 shares and instead sell covered calls that are further out. So then we would go for a longer expiration, maybe February, but there we don't get enough premium. So right now, so we see that the April 17 $7 calls, April 17 $7 calls, yeah, I mean, yeah, $25, yeah, but that's for a longer period. So selling the cash secured put would still pay better, because we could sell more in the same period, and overall then make multiple times our $13-14, versus in the 104 days only make one time the $27. But yeah, then the question would be, how does it look in immersion and cost? But there we also would need $860 or $750 to sell a cash secured put, and there are not as many options here. So, and the return is worse. So we get $20 in premium if there's volume for selling the $750 in immersion. And in cost, what's in cost? Cost has no options. Yeah. So yeah. Anyway, I think, yeah, like sadly, I think that's it for now. So the one important thing for our portfolio right now is to wait and see if this turns out to be just a 3-wave corrective pattern followed by a 5-wave move up, or if this is the beginning of the downward move that we were expecting. And to keep an eye on it for the next 2 weeks until those options expire. And then once they expire, depending on the outcome, or before they expire, depending on the current situation, make the decision if we want to roll the option or maybe be okay with the shares being called away. Or if we want to, if we keep the shares, what kind of covered calls we sell next and whatnot. Yeah. Anyway, so I said that's it for today. I hope you were able to take something away from today's stream. Don't forget, again, like, subscribe, enable notifications. And with that, I wish you a pleasant weekend and we see each other again on Monday with another episode of Daily Market Mastery. Till then, bye-bye.